Hey, what's up, my friend? So, in today's episode, I want to share with you three trading lessons I learned the hard way, and hopefully, right, you don't have to go through the same path that I did. Lesson number one is this, right? So, back in my uni days, I was somewhat of an investor. I was, buying shares in the local Singapore stock market. So, I was trading on margin at that point in time as well. I think my capital base was about $20,000. Then the broker allowed me to, trade up to, I think, 2 or 3 times the my account size. So I bought shares, right? I think up to about $40,000-50,000 worth of stock with my 20K capital base. And I got lucky, right? Because before the Europe debt crisis hit, right, the overall stock market is in a bull market. So I had $20,000 worth of capital. I ramped it up to about 30K within a couple of months. And at that point in time, I was feeling really good, right? I mean, here am I, a uni student, right? Making $10,000, right? In less than 2 months. And even my broker commented that, oh man, Rayner, you got a Midas touch. Then guess what? The Europe debt crisis hit. I lost all my open profits, right? And I pretty much, got back where I started from, which is about 20K or slightly less. So the problem with that is that, the lesson I learned, right, is that you can't just take whatever results that you had recently and project it into the future. So what I did is that I had made about 10,000 in 2 months, and I thought, man, $10,000 in 2 months, that means it's about $50,000 in 10 months, about 60,000 in a year. Wow, that's pretty good money. That's about $5,000 a month, right? Just investing the markets. Well, the problem with this is that the markets change, right? It goes from an uptrend to range to downtrend. Market is always changing, and clearly what happened to me is that I lost whatever open profits I had, right, and give it all back to the markets. So this means, right, you can be having a great year, 50% profits this year, but guess what, next year things might change, right? It might not be the same as what you experienced this year. It could be better or worse, right? So don't have unrealistic projections, right? Don't just project it linearly like this in the market, because it doesn't work that way. All right. Lesson number two, I underestimated the work involved to be a successful trader. So what happened is that when I first got started, I thought that, man, I just need to, understand how the market works. What is buy order, limit order, stop order, market order? After which, I just need to memorize a few simple chart patterns. Maybe head and shoulders pattern, a hammer, a shooting star, ting ting. Identify support, resistance. That's pretty much it, right? Wait for the price to come to support. Wait for hammer to form. Click buy. 1 to 2 risk reward ratio, TP. That's it. Call it a day. I thought that's pretty much what trading is all about. And it's only when I dive deeper I realized, man, it's not as easy as it seems, right? There's a lot more work to be done. I clearly underestimated the workload. So let me just share with you what's really involved, right? If you want to be successful at trading, if you want to be a profitable trader. Number one, you have to develop a trading plan. Okay, your trading plan got to entail which markets you're trading, specific market conditions, your entries, exits, trade management, risk management, etc. Once you've developed your trading plan, you need to execute your trade according to your plan. And this is where most traders falter. They have problem executing, right? For example, even 10 trades, right? 10 consistent trades according to their trading plan, they have problem doing it, right? Because they feel bored. They don't have the patience to wait for their trading setup, right? They have, the itchy finger syndrome, right? They want a revenge trade. They want some action in the markets, right? If you can't even execute your trades consistently, guess what? You're not going to be a consistent trader. So once you've done with the execution, you need to review your trades, right? Review, what went wrong, what went right, what are the setups that are making you money, okay? And recording, right? Recording your trades as well. Every time you put on a trade, you need to record them, right? So you can see that there's a lot of work involved, right? Developing, execution, recording, reviewing. Not just, memorizing some simple patterns, and then make money from the market. It doesn't work that way. So this is the second lesson that I had to learn, right? I underestimated the work involved, right, to be a trader. And finally, the last lesson that I learned the hard way is that I was very close-minded. I was stubborn, to be honest. I was very stubborn. So in my earliest of trading, right, I got started in price action trading. I think it's one of the earlier methodologies that I've learned, and I assume that price action trading is the way to trade. This is the holy grail. This is the only correct way to trade the markets. And the problem with that is that it made me ignore everything else. Right? So I was very close-minded. I just think that price action is king. I focus entirely on price action. And the problem with that is that that's not true, right? There are other ways to trade the market: trend following, mean reversion trading systems, trading calendar spreads, etc. So the aha moment I had is that when I realized, man, hedge funds out there, right, multi-billion-dollar hedge funds, they're actually adopting a strategy called trend following. And I was scratching my head. Trend following, is that trend trading? So I explored for that, and I realized there's a whole new world, right, outside of price action trading, and that's where I got involved with trend following, right? Then from one thing led to another. From trend following, right, I explored systems trading, mean reversion trading, right? And that's kind of opened up my eyes and realized that when it comes to trading, that there are many ways to skin a cat, right? You can't just think that your method is the best, right? You can't just, just take everything else as though it's junk, right? I mean, if you do that, right, then your trading education is pretty much limited to whatever you know at hand. But if you treat your cup, right, as half full, you always feel that there is always something out there that you do not know, you're always exploring, researching, validating new ideas, then that is how you get better as a trader. So I always remind myself, right, that even though I've been trading for 10 years now, right, there's always a lot of stuff that I'm not aware of to learn, to validate, to test, to research, right? And that's how you grow and become a better trader, right? So the close-mindedness, the stubbornness, right, is what also, helped me back in my trading career. All right, so with that said, right, those are the 3 lessons I've learned. Hopefully, you pick something up, right, and, could improve yourself as a trader. So with that said, I have come towards the end of today's episode, and I will talk to you soon.